Thank you, sir. Shall we start, sir?
Yes, ma'am. Yes.
Yes, sir. Yes, sir. A very happy morning to one and all connected here through this Zoom meet for a webinar on BSE's Investor Awareness Program, Principles of Investing, organized by Commerce Association of Kaamadhenu Arts and Science College, Sathimangalam, Erode District, along with Redfort Academy, Erode. So in this purview, let me take this opportunity to welcome you all for this gathering. First of all, I take this great opportunity to welcome today's eminent resource person, Ms. Marina Jose Kanjikal, resource person, Bombay Stock Exchange, Investor Protection Fund, New Delhi, for being with us even in this amidst your busy schedule. Welcome you, ma'am. I welcome our respected Secretary, ma'am, Ms. P. Arundhati of Kaamadhenu Arts and Science College, Sathimangalam, for being with us and continuing supporting in all our endeavors. Welcome you, ma'am. And I welcome the respected coordinator of this program, Dr. A. Sengotayan, sir, Associate Professor, PG and Research Department of Commerce, CA of Kaamadhenu Arts and Science College, Sathimangalam, and Director of Redfort Academy, Erode. Welcome you, sir. And also, I welcome the technical coordinators of this program, Dr. P. Saravanan, sir, Jagannathan, for being associated with us to make this function a grand success without any interruptions, technological wise. Welcome you, sirs. And also, I welcome the respected associate professors and assistant professors and dear students, sir, for this program. Once again, a warm welcome to you all. May I request our respected Secretary, Ms. P. Arundhati, ma'am, to felicitate us during this special occasion.
A very good morning to one and all who have joined for this webinar. I really would like to appreciate the Department of Commerce for your continuous programs. And I would like to welcome Ms. Marina Jose Kanjikal for joining us today to throw some light on BSE's Investor Awareness Program. Thank you so much, ma'am. Thank you, Uma.
Thank you, ma'am, for your kind words and motivating us. Thank you. Now, I take this great opportunity to introduce our eminent resource person, Marina Jose Kanjikal. She is a BSE investor. Excuse me. She is a resource person from Bombay Stock Exchange and Investor Protection Fund, New Delhi. Her educational qualification is BSc Mathematics from Mahatma Gandhi University, Kerala, and MBA Finance in Mahatma Gandhi University, Kerala. And she has working experience of February 2002 to December 2004 as Senior Officer, UAE Exchange and Finance Limited. From Jan 2005 to 2008, she was in charge of BSE's Investor Service Center, Cochin, Kerala. From the year 2014 to till date, she is the resource person of Bombay Stock Exchange and Investor Protection Fund, New Delhi, to conduct an investors awareness program across India. So, as I already said, to promote the learners and especially the students community of our institution and also outsiders of our institution to develop themselves apart from academics. So we are looking forward to such eminent resource person. So we have right eminent person, the right topic at the right time. Thank you for being with us, sir. Once again, may I request our eminent resource person, Ms. Marina Jose Kanjikal, a resource person, Bombay Stock Exchange, Investor Protection Fund, New Delhi, to deliver special address to the gathering on BSE's Investor. Over to you, ma'am.
Thank you so much. A very good morning to everyone who joined this awareness program today. I am Marina, as already mentioned more than a couple of times, and I represent BSE Limited, And today I shall speak to you about investing in shares. When we approach people and speak to them about investing in shares, when we approach people one-to-one, face-to-face, and talk to them about investing in shares, we have understood that there are two issues we have to tackle before people can start investing in shares. The first issue is this idea that you need to know, or you need to use a lot of formulas and a lot of ratios and analysis before you can invest. So that is what's a large percentage of Indian population are of the opinion that you need to know how to use all those ratios and formulas before investing in shares. If that is the case, if that was the case, then doctors, your English professors, your Tamil professors, they will not be eligible to invest in shares, because they definitely do not know to use any of this ratios, or they do not know how to use these ratios or formulas. We want the stock market to be available to everyone, irrespective of your background. You should be, we want you to invest in the stock market. So if you know to use those ratios and formulas, good, please go ahead and use them. You must use them. If you know to use it. But if you do not know to use it, in today's session, I will explain to you how to invest in shares without depending on too much technical knowledge, without using any formulas. We can still invest in shares. And I want all of you listening to me today to help us in spreading this awareness. I request all of you listening to me today, speak to after my session. I hope you would have gained from my session. So after that, when you meet your friends, relatives, your neighbors, colleagues, people you know, tell them, speak to them, help us spread this awareness that one, you don't need to use too much technical knowledge to invest in shares. Second issue that we are facing, that we have to tackle, is the fear that people have when it comes to investing in shares. A lot of people, when we speak to them, they have some kind of fear in their minds when it comes to investing in shares. They have no fear to invest in bank fixed deposits. They have no fear to invest in property, but they all have fear when it comes to shares. Why do people have this hesitation or fear when it comes to investing in shares? Only in shares there is some fear. Why? Over the years that have passed, a lot of people have invested in shares, and unfortunately, many people have lost their money. Now, so this news that people lost money in the stock markets, this news has spread to across the country. So now people of all age group, from all sectors, higher class, upper middle class, everybody, even the ordinary man walking on the road, if you go and ask him, what is your opinion about stock markets, they will tell you stock market is the place where you will likely to lose your money. Why did people lose money in the stock markets? If you study the investment pattern of those who lost money in the stock markets, you will see that they all made the same set of mistakes. So these investors kept repeating the same set of mistakes. So in today's session, I shall speak to you about the common mistakes that investors make in the stock market. And that is and that also I want you to, if you meet anyone showing interest in investing in shares, I want you to help me explain to them, these are the mistakes. So avoid these mistakes and you will make money in the stock market. So today's session will come in two parts. The first part, how to identify, how to select companies for investing without applying too much technical knowledge. Second, I will speak to you about the principles of investing, where I will give a lot of emphasis, or I will highlight the mistakes that people make while investing in shares. Now I am going to share my screen. I request any of the participants to please let me know if you can see my screen. Please. All right. Are you able to see my screen? And are my slides moving?
Yes, sir. Yes, ma'am. Yes.
Okay. Okay. Thank you. Thank you. All right. So I was talking to you about one, how to pick a company for investing. Second, how to or the mistakes. I will highlight the mistakes that investors make while investing in shares, so that you don't repeat those mistakes. So picking a company for investing, principles of investing, mistake people make while investing. So first, let's understand what is investing. What do you understand by the term investing? Investing means growing your money. That is called investing. Growing your money. Why should you grow your money? Many of you are degree students and UG students. Some of you may be maybe postgraduates, maybe some outsiders who are postgraduate students. Well, let's assume you all take up your first job after your post-graduation. So I know some of you will start working right after your graduation, but let's assume you all take up your first job right after your post-graduation, which is you will be around 23 or 24 after your post-graduation. So 23, 24 or 23, you take up your first job and you work. If you are in a private organization, you will work all the way till you are 60. So from the age of 23, when you start working, you will start getting your salary. You will start earning your income, your salary. From your salary, some amount will be spent as to meet the expenses for that particular month. So from your salary, some amount of your salary will be spent to meet the expenses for that particular month. Some amount of your salary will remain unspent. You can keep that unspent amount of your salary in your bank account. No, nobody will take you to jail for keeping unspent salary in your bank account idle. No, it is legal. It is okay. Nobody can tell you what to do with that money. But if you choose to keep unspent amount of your salary idle in your bank account, and that too all the way till 60, till the age of 60, I will tell you what will happen. At the age of 60, you will retire. Your income will stop. That means you will stop getting your salary at the age of 60, but your expenses will continue. Now, to meet those expenses that you are going to incur post your retirement, you will have to rely or depend on this unspent amount of your salary that you accumulated in your bank account from the age of 23 to the age of 60. So from the age of 23 to the age of 60, you kept unspent amount of your salary, idle in your bank account. You will have to depend on that money to meet the expenses that you are going to incur post-retirement. Now, let me tell all of you listening to me today, all the students, listen very carefully. That amount, you all will say it's a big amount. Okay, from age of 23 to 60, unspent salary, amount of the salary is going to be a big amount. Yes, it is definitely going to be a big amount. But that big amount will not be enough for you to meet the expenses you are going to incur post-retirement. It's as simple as that. Take it from me. That big amount will not be enough to meet the expenses you are going to incur post-retirement, which means that you have to grow that money while you are still working. You have to invest that money. You have to grow that money. So if you are here in India, there are many places where you can grow your money. You can invest your money. I have put up some of the investment options here on this particular slides. You can invest your money in shares. You can invest your money in shares, and you can expect very good returns from your investments. Okay, you can expect very handsome returns from your investments, as much as ranging in returns ranging from returns ranging between 15 to 20%. You can expect 15 to 20% returns on your investments in shares, provided, okay, now here terms and conditions apply. So you can expect 15 to 20% returns on your investments, provided you pick the right companies. There are around 5,800 companies in BSE. Will you agree with me if I tell you that all the companies in BSE are good for the purpose of investing? All of them will help your money to grow. So investing is growing your money. All companies in BSE and in NSE will help your money to grow. Will you agree with that statement? Students, I don't mind, you can unmute and answer. Will you agree? All companies listed will help your money to grow. Well, I'm sure all of you are saying at your respective homes, and you are all telling yourself no. So definitely not all of them can help your money to grow. Only a few companies from all these listed companies only a few companies will help your money to grow. How do we identify those few companies? How do we, now the next task is, how do we identify those few companies that will help our money to grow? Go online. Go online and get maximum information I just a message that someone is asking, requesting for a remote to remotely control my screen. Shall I decline that, sir? Or should I approve that?
Slides are moving, ma'am. No problem.
So, okay, shall I decline it then?
Yes, ma'am. Yes, ma'am.
Okay, thank you.
You can share that from your side.
Okay, okay. Go online and get maximum information about the company. We tell investors, see, getting information about a company will take a lot of time. And when I say maximum information, you know, there is nothing, there is no limit. Maximum information is limitless. But try to get at least 3 sets of information. The first set of information is the growth in the sales of the company and the growth in the sales. Second, the profits of the company over the past 5 years. So growth in the sales over the past 5 years. Second, profits of the company over the last 5 years. And the third, the dividend payouts by the company over the last 5 years. So I said sales and growth in the sales for the last 5 years, profits, growth in profits for the last 5 years, dividend payouts, and companies should have regularly given dividends over the last 5 years. Why are we insisting on you to get to look out for growth in the sales and growth in the profits? Why are we insisting on increase in sales, increase in profits? Why isn't profits alone? Profits alone should be enough, isn't it? Companies making profits, that alone should be should do. Am I not right? Well, let's take for example, in 2015, a company made 500 crore profits. You will tell me, and I also will agree with you, that 500 crore profits is a very good figure to post as profits. After deducting all those interest and tax, after every deduction, all permitted deductions, the company has made 500 crore profits. It is definitely a very good amount, a figure to show as profits. 2016, the same company made 500 crore profits. 2017, 500 crore profits. 2018, 500 crore profits. 2019, again 500 crore profits. 2020, 500 crore profits. Do not invest in that company. Don't invest in that company. Why? India's economy was growing. Over the last 5 years, India's economy grew. India's population increased. This company should also grow. This company cannot remain like this throughout for 5 years and 10 years. No. So that is the reason why we are insisting that the company should have registered some increase in sales and some kind of increase in profits over the last 5 years. In between some places here and there, 1 year in the last 5 years, maybe one particular year the company did not make profits. That is accepted, because even the best companies in India, have all gone through at some point of time a bad phase, some crisis. Every single company in India has gone through a bad phase at some point of time. Not even pandemic. I'm not talking about pandemic. I'm talking about prior to the pandemic. During that period of crisis, or for the company, during that period, the company's performance would have been affected. The revenue, the profits would have been affected. So you might find a dip in the profits or in dip in the sales. So it is fine. It is fine that once in 6-7 years you get a dip in the profits. It's accepted. It's accepted. Otherwise, the remaining years you found out that the company has consistently been growing and by way of increase in sales and increase in profits. So 3 criteria minimum. The company should have registered increase in sales, increase in profits over the last 5 years, and the company should have regularly given dividends to the shareholders over the last 5 years. 3 ticks. You can go ahead and invest in that company. I told you that you can get all this information online. All this information they are all free of cost. To make it easier for you, you can visit the website of BSE Limited, and our website is bseindia.com. The top right corner of the screen, there is the provision where you can type the name of the company, the details, whose information you need. When you type the name of the company, whose information you need, you will be immediately directed to a page which is dedicated to information of only that company. The information in BSE's website that we have put up in BSE website, the information is put up in a tabular form. Okay, it's put up in a tabular form, and because the information is in a tabular form, it becomes easier for investors, to study and to compare. Last year, 2 years back, it's in a tabular form. It becomes easier for you to compare between different financial periods. So we have actually designed our website for the benefit of investors. Okay, it is for the benefit of investors that we have done that. Make use of our website. Just in one website, you will get all information of the companies and the data, the information, the figure that you get from BSE's website is exactly the same data, same information, same figure you will get if you go to the website of the company. So it's exactly the same data, same figure you will get if you visit the website of the company. Try to get, when you are investing, try to get as much information about the company. This will always help you in understanding the company better. This will help you in making a good decision on which companies to invest and which companies not to invest. So you do not need to really apply any ratios or formulas. Just getting these 3 information: the sales, the profits, and the dividend. This is enough. This is just fine to help you decide whether to invest in that company or not. So far, what I explained to the students, is it clear? Is it clear? Did I explain it in a way that you were able to follow? You were able to understand? Was my explanation simple that you could follow, the students? I cannot see the chat box. If you can unmute and tell me. The students, any students, were you able to follow?
You're able to follow, ma'am.
Okay, thank you. So that is the first part of the session. That was what now we've completed the first part of the awareness program. Let's now move on to the principles of investing, where I shall not only speak to you about the principles of investing, I will also highlight the mistakes that people make while investing in shares. And let me start with a mistake. Let me start with the most common mistake that people make while investing in shares, and it is investing in penny stocks. You see, in BSE, we have roughly around 5,800 companies. The prices of the shares of these companies, the prices vary. We have companies where one share is around 100 rupees. Okay. We have companies, one share is around 200 rupees. We have companies, one share around 1,000 rupees. To buy one share, you have to pay around 1,000 rupees. Many companies are there. One share is, to buy one share, you pay only 100 rupees. Then one share, you pay 1,000 rupees. We have many companies, one share, you have to pay more than 10,000 rupees. Bosch India Limited is a company. One share, Bosch Limited is a company. One share is around 30,000 rupees. One share, to buy one share. Honeywell Automation, one share is around 40,000 rupees. And we also have a company called MRF. You've heard of the company MRF? Of course, you've heard of MRF. Well, MRF, one share is around 82,000 rupees. So we have companies, the prices of the shares vary from starting from, not starting, I'll go from the upper limits, from 80,000, almost 80,000 odd rupees, coming down to 1,000 to 40,000, half of 80, 40, coming down to 5,000. Then we have companies available at 200 rupees per share, 100 rupees per share, and we also have companies available whose shares are available at 50 paisa per share. Penny stocks are those companies where the shares are available at a price less than the face value of the share. That is how we define penny stocks. The shares are trading, or the prices of the shares are less than the face value of the share. So in most cases, the face value is normally 10 rupees. Shares face value is normally 10, and the shares are trading below 10 rupees, below the face value. So we have many companies trading at 1 rupee, 10 paisa, 2 rupee 20 paisa, 2 rupee 25 paisa, and we have companies trading at 75 paisa, 80 paisa. When you start investing in shares, you will start getting advice. Okay, advice will come from here and from there and from here and from here, and so many advices will start coming and hitting you on the face. One particular advice will be something like this: oh, this company, one share only 50 paisa. Why one share is costing only 50 paisa? I promise you, in 6 months' time, that company share is going to cross 5 rupees. I promise you. You will be tempted to buy the share of the company. Why? That person said, I promise 3 times. He said, I promise, which means that 50 paisa share is definitely going to cross 5 rupees in 6 months. He said it so convincingly. So you will be tempted to immediately buy the share of the company. That is first reason. Second reason why you will buy the share of the company is you do one quickly, you do a calculation in your mind. One share is 50 paisa. So if I buy 1,000 shares, how much will I pay? 50 paisa into 1,000 is 500 rupees. Oh, then you think to yourself, that's it, 500 rupees. I pay 500 rupees and I will get 1000 shares. Oh, when I give birthday trips to my friends, I end up spending more than 500 rupees. So what's there? 500 rupees. You have 500 rupees to spend. I will tell you where to spend it, how to spend. You go to that fancy restaurant in your area, in your close to where your home, where you stay. Those big banners they have put outside the restaurant, outside at posh hotels. Lunch buffet, 500 rupees. Brackets, all tax included. Lunch buffet, 500 rupees inclusive of all taxes. Over. You go there, you spend 500 rupees there, have one lavish lunch. It is much better than putting in penny stocks. You put in penny stocks, you are most likely to lose your money. So that is mistake number one that we find investors making. Investing in penny stocks. Always look out for sectors that are growing. Always look out for companies that are growing and changing. That is very important. Companies should change. Not only just grow, they should change. Things around us are changing. The society is changing. The January 2020 is not the same as January 2021. January 2020, all of you could walk, into your college in groups of 5, 6, 7, happily talking, and you can just walk into your college. January 2021, if 10 people are seen walking together, people will shout social distancing, social distancing, and you not even talk, or you without the mask on. January 2020, we were all busy attending family functions and making was all noise and all doing all whatever we enjoy doing with our friends and families. January 2021, only 20 people can gather for at a wedding. So things around us are changing. And if you think that pandemic is the first crisis we are facing, no, definitely not. We have been facing so many other crises prior to pandemic. We have been facing global warming, climate issues. We have been facing the climate changes. Sudden which climate changes that happen because of global warming. So these are issues that we were facing before the pandemic, and we are still facing these issues now also. These issues are still there, not resolved. These issues are still going on. Only problem is the focus has changed. Many countries were together trying to tackle global warming, climate change, and then pandemic struck. So focus has changed towards pandemic. These issues are still there, and we have to tackle these issues along with the pandemic. Companies cannot pollute the environment the way they used to pollute in 1930s, 1940s. You see, 1930s, 1940s, across the globe, we were trying to boost in the industrialization. We forgot that this industry will pollute, but later on we realized. So we have now very strong laws. Companies cannot pollute the environment the way they used to pollute in 1930s and 1940s. I will give you a better example here, very good example here. So when I was a student, a postgraduate student, which was around 20 years back, a report had come in the paper. The report said, we have enough crude oil to last another 40 more years. 20 years has passed. So if that report is correct, starting from today, we have crude oil to last another 20 more years. So that is the reason why automobile companies are pumping in money to come out with cars, engines that will not depend on petrol or diesel to run. That is why they are trying to bring out cars that can run on battery, or recently you saw the news, a car running with on solar cells. Tell me, what will happen to an automobile company? They are relaxing. We are going to make only petrol and diesel cars. We are not going to change. Come what may, we will not change. We are going to make only petrol and diesel cars. Tell me, what will happen to that company in a few years' time? That company will close down. Simple. No more petrol, no more diesel, company will close down. So things around us are changing. The companies also should change. I always have modest expectations when it comes to returns from the stock markets. At the beginning of my session, I told you the good companies in India will give you between 15 to 20% returns. The good companies will give you regularly. They have always given. They have given regularly 15 to 20% returns. And some companies have given 200% returns, 150% returns, some companies. When you are investing in the stock markets, please don't invest expecting 200%, 150%. Yes, some companies have given, but we came to know only after the returns. After they gave returns, we came to know, all right, that particular company gave 150%, that particular company gave 200%. Before that happened, before the returns of 150, 200, before that returns came, nobody could guess which one will give. Nobody can guess which one will give it. After they give it, people make noise. Lot of noise. That company gave, this company gave. After it happened, people make noise. Before it happened, nobody can guess. So when you are investing in the stock market, please invest. Buy the shares of the good company. You will get between 15 to 20% returns. Then if you are very lucky, you might get 200, 100% returns if you are lucky. One of those companies might give you 100, 200% returns. Otherwise, the general rule is shares of a good company and you will get 15 to 20% returns. Always have long-term view while investing in shares. In the stock markets, you are investing. You must be mentally prepared to keep those shares with you for at least 5 years. At least 5 years. If you can keep it longer, better. Because the longer you keep, the better, the more you make. That is what we tell investors. Keep the shares with you for at least 5 years and you will definitely, or I will say that is when you actually benefit from your investment. I will show you our graph. This is our BSE graph. It's an old graph. Okay, it's not anytime recently. This is a graph where the BSE was around 30,000. Okay, now it's 50, across 52,000. So this is what our BSE graph looks like. Some days the stock market is up, some days the stock market is down. Now, which day the stock market will go up, which day the stock market will come down, nobody can predict. When I was a student, I used to think that stock market professional, he knows today whether the market will go up. Stock market professional, okay, they know whether the market will come down, which day it will come down. They know what will happen in 1 month's time. They know what will happen in 3 months' time. Well, wrong. I was wrong. And I'm sure most of you listening to me today also have had the similar, you also have similar opinion. Stock market professional, we know whether it will go up or it will come down. No. No matter how many years experience you have in the stock market, nobody can predict. Whether the market will go up today or come down today, nobody can predict what will happen in a short period of time. But there is one thing we can tell you for sure, and it is buy the share of a good company, keep it with you long term, at least 5 years or longer. You will definitely make profits. Good company, keep it long term, you will definitely make profits. So that is what we tell investors. Can you all see my hand? Is my hand, are my hands coming within the frame? From my screen, it's coming within the frame. I hope it's also within the frame in your screens. Using my hand, I am going to show you how the stock market functions. Using my hand, I am going to show you how the stock market functions. You bought some shares when the stock market was this level. Today, you bought some shares at this level. Tomorrow, okay, let's say this tomorrow and all are working days. Okay, tomorrow is Sunday, a holiday. Well, let's say it's a working day. Today also is a holiday, so you can't buy shares. You can't buy shares on Saturday and Sundays. They are holidays. But let's say you bought some shares today, and stock markets at this level. Tomorrow, next working day, the stock market went up a bit. You are happy? Of course, you are happy. The day after that, it came down a bit. You were not bothered. It's okay. And the day after that, it came still down. All right. Now, you bought the share at this level. It is at a level below the level at which you bought. You might get a bit worried here. There is no need to be there is no need to be worried. Please stay calm. Stay calm. Let me finish the story. Then the next day it went up a little bit. Then it came down. Then it went up 2 days. Then it came down 1 day. Then it went up. Then it came down. 8 or 9 working days have passed. You bought the shares at this level. It is still at the same level. It does not. There's not much change. This is how the stock market is. You have to be patient. You have to be patient. Keep holding. Keep holding. You bought the shares of a good company. Keep the shares. Story is not over yet. All right. So then it went up. Then it came down. Then it went up 2 days. Then it came down. Then it went up 2 more days. Then came down 2 days. Then went up to up, down, down, up, down, down. Some days up, some days down. After 5 years, stock market is here. You bought at this level. Ups and downs did not stop. They kept happening. Some days up, some days down. But these ups and downs have an upward trend. That is why after 5 years, it's here and you make profits. The same graph. If you take 8 working days or 10 working days or 15 working days, you will think the stock market is very flat. That is what you will think. The stock market is looking very flat. But you take a long-term graph, you will see that the stock market has these ups and downs are there, and it has an upward trend. That is how you make your profits. Do you know what actually happens? So this is what we tell investors. Shares of a good company, buy. Keep it with you, 5 years, you make profits. Do you know what actually happens? What investors actually do? Majority of them, what they actually do. I will tell you what they do. They buy the shares of the company. Now I'm going to use some examples. I'm going to take the names of some companies. Just for purpose of examples, they bought the shares of HDFC Bank today. Then the moment they buy, they expect the price to go up, and it should go only up, 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 up. It cannot come down. No, that they will not accept. It should only keep going up. And I already told you, the stock market is not like that. Some days it's up, some days it's down. So they expect the price to go up the very moment they buy it. And we all have the smartphones. Every 10 minutes, they will keep fishing out the smartphones and checking what's the rate of HDFC Bank, what's the rate. Every 10 minutes, they will keep tracking the prices of the company, the share they bought. What's the rate of HDFC Bank? What's the rate? What's the rate? What's the rate? Rate is not going up. Oh, rate is not going up the way we want. Rate is not going up. They will, after 3 working days, they will sell off HDFC Bank and buy the shares of Asian Paints. Again, they'll keep tracking every 5 minutes. They will keep 10 minutes. They will keep tracking. What's the rate of Asian Paints? What's the rate of Asian Paints? What's the rate? What's the rate? Oh, share is not going up. Very flat. Not going up. Not going up. Sell off after 3 days. Watch sell off Asian Paints. Buy the shares of Hindustan Unilever Limited. Madness continues. Every 10 minutes, they keep fishing the phone and checking what's the rate, what's the rate, what's the rate. The Hindustan Unilever not going up, share price not going up, not going up. Sell off Hindustan Unilever. Let's buy the share of Dr. Reddy's Lab. And again, they will track it. This very act of buying, selling every 3-4 working days, shares of companies, because the prices are not going up, this very act, you will only end up losing your money. And I'm so sorry to tell you that money is the least of the things that you are going to lose. Least in the hierarchy of importance, money is the least important thing you are losing here. There are other things you are going to lose. You are a student and you are fishing out your phone every 10 minutes to track the price of the share of the company. What does it mean? It means your concentration is not on your studies. Your concentration is here in the stock markets. You are neglecting your studies. You are destroying your studies. If you are a working professional, you are picking the phone every 10 minutes. You are destroying your career. And this very act of picking up phone every 10 minutes, becoming impatient, becoming restless, anxiety, you will get heart attack. You will end up destroying your health. So your money gone, your career, your studies all destroyed, your health ruined. You will end up destroying your lives. You know yourself well. You know if you are the impatient type. You know what kind of a person you are. Are you impatient? Are you restless? Are you the person who gets anxious? You are that kind of a person. Do not put your money in the stock markets. There are so many other places to invest. Go there and invest. Not in the stock markets. If you are investing in the stock markets, you must be calm and you must be mentally prepared to keep the investment long term. Come what may, up, down, whatever. Keep the investment long term. You will definitely make profits. So far, what I explained to the students, was it clear? There are more principles of investing. I want to first, because I cannot see your faces. I normally go to colleges and address students in their classrooms. When I speak to students in the classroom, I can see their faces and I can make out whether they are able to follow me. So the students, are you okay? I believe that you are able to. The rest of the students, I got one reply. I hope the rest of the students are able to follow what I am speaking, what I'm saying. All right. So that is the second mistake that people make in the stock markets. Expecting profits in a short period of time, not getting, then getting anxious, impatient, selling, buying another company shares, again not getting profit, not meeting expectations, selling off, buying another company shares, profit not meeting expectations, selling, buying, selling, buying, selling, buying, selling. You will. Second way to lose your money in the stock market. The third mistake that people make in the stock market is selling during panic selling. Panic selling is selling off your shares during a stock market crash. I told you of, okay, I told you that the stock market consists of ups and downs. Some days it's up, some days it's down. Now, once in a while, it's not a regular thing. Once in a while, the stock market has a big down. It has a big fall. When the stock market registers a big fall, we call it a stock market crash. Investors tend to be calm all throughout, ups and downs, they will be calm. But when there is a stock market crash, they panic and they sell off the shares. So they panic and sell off the shares. When you panic and sell off your shares during a crash, we call it panic selling. If you sell off your shares during a stock market crash, you are most likely to end up losing your money. Stay calm, stay calm. The stock markets will always recover after a crash. The stock market will always recover after a crash. You see, BSE Sensex was introduced on January 1st, 1986. On that particular day that BSE Sensex was introduced, BSE Sensex closed at around 500 points. Around 500 points it closed. Very recently, BSE Sensex crossed 52,800 points. How did BSE Sensex move from 500 points to 52,800 points if Sensex is only crashing? Crashes happen. Once in a while it happens. Then how did it move from 500 to 52,800? Well, the only explanation I can give you is, after every crash comes a recovery. All you need to do is stay calm. Stock markets will recover. So just stay calm. Ups and downs will happen. Once, very rarely, a market crash will happen. Stay calm. The stock market will recover. So during a stock market crash, instead of panicking and selling, you rejoice and buy. You buy some shares because you are getting it at a very cheap, at very low rates. So instead of selling, buy during the stock market crash. So that is the third mistake that investors make in the stock market. Never borrow money to invest in shares. You can borrow money if there is a medical emergency in your family. Go ahead and borrow money. Borrow money if you have to pay your child's tuition fee. Definitely you must borrow money if you don't have money at that moment. But please don't go around neighbor's house and borrowing money to invest in stock markets. Don't do that. At the beginning of the session, I told you that we expect you to go online, get information about the company. I told you what kind of information, minimum information they expect you to get. Well, after buying the shares of a company, we expect you to continue reading about the company. You must know what the company is doing. You must know in which direction the company is going. Though we don't expect you to read every day about the company, not required, but once in a while, you all have this smartphone. Before you sleep, I know all of you lie down and browse you browse through what you watch YouTube videos, don't you? Before you sleep, you browse. Don't tell me you don't watch YouTube videos. Okay, so go. Once in a while, before you sleep, take your phones, take whatever you use. Just read the latest news about that company. You must monitor your investments. Your shares will be in your demat account. That is the account you open to keep your shares. Once in a while, just go through the shares in your demat account. And when you keep shares in your demat account, you will get dividends that are automatically credited to your bank account. You don't have to run anywhere looking for dividends. When the company declares dividend, it will automatically come to your bank account. So once in a while, track your shares, keep a watch on your shares, check your bank account to see whether the dividends have come. If the dividends have not come, don't think it's a scam, don't think it's fraud. Sometimes dividend may not come. company would have declared dividend, but the dividend may not come. It happens. It is not a fraud. It is not a scam. It is genuine clerical error. Some error, because though the system is automated, somewhere in between a human is needed to do some entry. And human beings unintentionally can make mistakes. We can make mistakes. You don't get your dividends. Company declared bonus shares. You do not get your bonus shares. All you need to do is inform BSE or inform SEBI. We will take up the matter with the company immediately, and the company will rectify your complaints. Even the best companies in India, Wipro, Infosys, TCS, State Bank of India, so even these best companies have investors have raised complaints saying that they did not get their dividends, they did not get the shares or whatever. Or you let us know. We will take it up with the company, and the company they have all these companies have immediately rectified the complaint. Never wait for a lump sum. Never wait for a lump sum to invest before investing. Many investors will tell you, when I get 5 lakhs, then I will start investing. When I get 7 lakhs, then I will start investing. Oh my God, 5 lakhs, 7 lakhs. This is big money. This kind of money will not come to us just like every now and then. We are working middle class people. We don't get 5 lakhs, 7 lakhs just coming like that. No, what we get on a regular basis is our salary. And we expect you to invest from your salary. 7 lakhs, 8 lakhs, and let it be. From your salary, you should invest. And I will take you a few slides back. We are very fortunate that in India, here in India, we have so many investment options that suit working middle class people like you and me, who don't see 5 lakhs, 7 lakhs coming just like that. What we get on a regular basis is our salary. From your salary, some amount will go as expenses, some amount will not be will remain unspent. The unspent amount, split it. You split the unspent amount. Put some. You can start a bank recurring with 1,000 rupees. You can start a post office recurring with less than 1,000 rupees. You can start mutual fund with just 500 rupees. You can buy shares. I told you, you have good companies starting from 100 rupees all the way to 85,000. So let's forget 85,000 rupees, 30,000 rupees, one share, 30,000 rupees. It's beyond our level. It's beyond majority of us, beyond our level. We can afford 100 rupees, buying one share, 100 rupees. I will take you online. I will take you to, let's go online for a moment. We'll come back to the slides. Don't worry. I will take you to BSEindias.com, our website. And remember, I told you the top right corner, you have the option to type the name of the company whose detail you want. So let's go. Let's take Indian Oil Corporation. Indian Oil Corporation. And you will be directed to a page where you have information dedicated to Indian Oil Corporation. This page has information of only Indian Oil Corporation. Let's go to financials. Before that, can you confirm, are you able to see this BSE's website that I am browsing through?
Yes, ma'am. Yes, ma'am.
Okay, all right. Okay, go to results. When you go to results, by default, you will get the results of the last few quarters. This result is I remember I told you they are in a tabular form. See, I'm not lying. exactly what I told you. I always say the truth. See, I always say the truth. But we want details. Remember, I said no last 5 years. So you come through from instead of quarterly, you come to annual, and you will get details of the last 5 years. So from 2021 to 2017. You come down. Oh, you are not, Dr. Swapna is saying that a BSE website is not visible. I'm sharing this page. It's not visible. Ma'am, can you?
Yes, ma'am. No, ma'am, it's not visible. Not visible.
Oh. It's not visible to anyone. The BSE's website that I'm trying to share.
No, ma'am, it's not visible. Your slide is visible, ma'am.
Pardon?
Your slide is visible. Saving your investing options. That slide is visible.
That is the slide that is coming. Oh,
Yes.
okay. So let me see. Let me try to. You share. Let me try to. Okay. Now is it visible, ma'am?
Yes, ma'am, on Excel format, I think.
Yeah, so that's our website, the BSE's website. I had okay. This is our. I had just taken this BSE website, and I typed Indian Oil Corporation here at this top right corner. When I type Indian Oil Corporation, I was directed to a page dedicated to information of only Indian Oil Corporation. And then here, you come to financials, you come to results. When you come to results, by default, the quarterly results is what you get. If you go to annual results, so the one share of Indian Oil Corporation is around 103. So it's around, let's say 103, 105 is the price of one share. One share we get it at 103. Let's go to annual. Let's go for results annually, annual results. And if you come to the dividends, you will see. If you come to dividends, you will see that this particular company, which one share is 103 or 105 rupees, they have given dividends of ranging this year they gave 23 rupees per share. You bought a share of 105 rupees, you got 23 rupees as dividend. Last year, the pandemic, it's a different story, but they still gave dividends of 1.43 rupees. The year before that, they gave 17. The year before that, they gave 22. And the year before that, they gave 40. So you can say on an average, you are getting around 20 rupees dividend for a share costing around 100 and for a share costing around 105 rupees. So it comes to around 20% returns on your investment. You pay 105, you are getting around 20 rupees dividend. Is around 20% returns. Yes, and that too consistently you are getting around that much returns from your investments. No bank fixed deposits will give you around 20% returns. No investment I know of will give you around 20% returns. The stock market will give you around 20% returns, and you have companies that whose shares are affordable. 100 rupees per share, we can definitely afford it. So I'll just let me now share the other screen with you. One more time. Are you seeing my my PPT? Okay, I hope you can now see my PPT. Okay, so we have places where you can invest your unspent money. So if your unspent money after your expenses, if your unspent money is let's say 5,000 rupees, spread it. Spread that. Don't keep it idle in your bank account. Keep some for emergency withdrawal. Keep some, but the rest should be invested. You can buy shares at 100 rupees. You can invest in mutual funds for just 500. You can put your money in post office recurring. You can start a bank recurring. Invest your money. Starting from your second salary onwards, you must invest. And now I am sure all the students are wondering, why did ma'am say second salary onwards? I will tell you why. Here in India, we always tend to don't give our first salary to our parents, to our grandparents. Okay, so first salary we don't normally spend. Starting from your second, that is why I said, starting from your second salary onwards, we expect you to invest as much as you can. I never invest purely based on tips that you are getting from TV channels or via SMS. You can invest, you can collect tips, but before you invest, please go online, get maximum information about the company, and then you invest. You do your own. So that is, you have to do your own analysis. Do not rely on the analysis of somebody else. The fourth mistake that people make in the stock market: investing in the doubling, tripling schemes. But people will tell you, I will double your money in 3 months. I will triple your money in 9 months. Every single investor who has invested in that scheme has only lost their money. And we don't get any happiness in seeing people losing money in the stock market. When someone comes to you and tells you, I will double your money, I will triple your money, you run away. So a quick recap on the mistakes that people make in the stock markets. One, investing in penny stocks. Second, expecting returns in a short period of time, not getting it, then selling, then buying, then selling and buying. You will lose your money. Third, selling your shares during a stock market crash. You will definitely lose your money. And fourth, investing in those doubling, tripling schemes, you will definitely lose your money. How do people make money in the stock market? Then never compromise on the company. Make sure you are buying the shares of the best companies in India. First. Second, make sure you are spreading your investments across different investment options. Though I am from the stock markets, nobody will tell you put all your money in the stock market. No, that is not how to invest. You are supposed to spread your investments across different investment options. And within shares, you are supposed to spread it across different types of companies. Don't buy only software companies. Don't buy only banks. No, it has to be spread. Some banks, some software, some FMCG, some maybe pharma. You have to spread your investments. Start investing from your second salary onwards. Make it a habit to invest every month and be mentally prepared to keep the investments long term. This will bring me to the end of this particular session. But before I hand over the session back, let me just talk to you about the job opportunities we have in the stock markets. You see, the stock markets, it comprises of different entities. I will share a slide. I will share this. Okay, all right. I'll just tell it to you then. The stock markets, we comprise of different activities. If you ask any student, especially, what do you know about stock markets? They will tell you, but stock market is the place where you buy and sell shares. Well, buying and selling shares is the most popular activity in the stock market. But it is not the only activity in the stock market. We have many companies that are not involved, that are part of the Indian capital markets, but not at all involved in buying, selling of shares. Their duties, their functions are something else, but they all come under Indian capital markets. So buying, selling of shares and activities that are related to, that are not related to buying and selling. So activities related to buying and selling, activities related to not related to buying and selling. All this and much more are part of the Indian capital markets. These companies that come under Indian capital markets, 95% of their employees are people with commerce background. So these companies prefer, when it comes to employing, they prefer to have to take people with commerce background, and the other 5% are candidates maybe with economics background, or candidates with maths background, or those who are good at numbers and who can grasp those kind of concepts quickly. You see, I am a mathematics graduate, but who took up my first job was with a stockbroker. So we constitute, people like me, we make up the other 5%, but 95% are all commerce graduates. So the stock markets is the right place for people like students like you. When you take up a job with any entity in the stock markets, there are certain exams, courses that you are expected to do or to complete, and these exams or these courses will certify that you are an expert in that particular field. If you take buying and selling, if you take trading itself, in trading we have trading in equity, so we have exams for equity segments. If you take, we have trading in derivatives, options, we have exams in that particular segment. We have trading in commodities, we have exams in that segment. So if it other than trading, we have demat accounts. Yeah, so we have exams for depositories, that is the demat accounts related segments. We have exams for mutual funds. We have exams on surveillance and compliance, and so there are different types of exams you can write that will give you an advantage when you are working with in this particular field. So what I normally tell students is, take up a job with a stockbroker. That's what I normally tell students. Most stockbrokers take freshers. When I say freshers, what I mean is you are just a graduate or a postgraduate with zero working experience. You have zero working experience, and you have, assuming you have not written any of those exams, equity, derivative, you have not written any of these exams, and you have zero working experience, you can still work for a stockbroker. Stockbrokers take freshers. When you take up a job with a stockbroker, you will be exposed to different operations. You will be exposed to equity trading, you will be exposed to derivatives trading, and you will be exposed to demat, operating a demat account, helping to open a demat account. You will be exposed to surveillance, because stockbroker has to abide by laws and rules and regulations laid down by SEBI, laid down by BSE. So you will be exposed to those rules, and you will be part of the team to make sure that the stockbroker is complying, to the functioning in conformity to those rules. So you will be exposed to so many things. Identify your area of interest. You might be derivatives might catch your attention. You must have, suddenly you might have some uh, uh, interests in derivatives trading, or you might suddenly realize that your interest is in those compliance of following those rules and regulations. Identify your interest when you start working with a stockbroker. Find out which is your interest. After you've identified your interest, then you attempt those exams in that particular segment. Derivatives itself, we have the beginners, then we have the advanced. So attempt maximum exams available in that segment. In addition to that, so when the more exams you attempt, more in demand you will be, because we have so now you are gaining work experience, and you are attempting exams in that area, your area of interest. Because of your work experience, when you attempt these exams, you are most likely to clear. Why? Though you get study material, this work exposure is so rich that you will be able to clear those exams very easily. Clear the exams. After you've got some years of work experience, you have cleared a couple of those exams. These exams are self-study, all right? These exams are self-study. After you've done all this, you can then upgrade. You can either continue working with a stockbroker, no problem, or you can move to stock exchanges. You can move to mutual funds. Mutual funds also, we have exams. You can move to working with the depositories, NSDL, CDSL, BSE, NSE. You can move. Why? Because now you have work experience and you have those certificates. This organization, the stock exchanges, the depositories, the fund, the AM, what is it? Mutual fund, AMC, asset management companies. These companies, they all prefer to take experienced candidates. They all prefer to take experienced candidates. If you want more information about the courses, and then in addition to these exams, we have short-term courses also. 1 month, 3 months, 6 months, 1 year, 2 year. We have courses in BSE. BSE offers these courses, and you don't have to. There was a time 2 years back you had to come to our office to do the courses. You have to come here to do the courses. Now it's all available online through via webinar. We teach you we teach you these courses. I am going to share my. I will just pass on the number. If you have any, you want to do any of the courses. The reason why I don't have exact knowledge about the courses is, the reason is, these courses, they keep, exams are fixed. The exams are fixed. BSE exams are fixed. On equity, we have exams, derivatives, commodities. But the other courses, they're 3 months, 6 month courses. This keeps changing. They keep upgrading. Now they keep, depending on industry's needs. We connect with the industry. We understand what industries want, what the MNCs, what they want. Now, depending on industry's needs, we change our courses. So we keep changing the courses. So since the courses that's a different department altogether. I will share the number with you. His name is Mr. Akash, and you can call him anytime you want. And he will guide you with the different courses available in BSE and the fees. So the fees, they keep upgrading, which since it's a different department, I don't know the exact fees right now. You can speak. Please feel free to call. His name is Mr. Akash. And he will give you he will give you an updated, he'll give you updated information. Okay, I hope you have my the message I typed is available, has been displayed on your screen, on your chat box. That is his Mr. Akash, and that is his number. Please feel free to call him and tell him what you are looking out for. Are you looking for a 3-month course, or are you looking for a short term? Tell him which field you would like to work in, and he will be able to guide. He's a counselor. He will be able to guide you which are the best courses for you, which will be the best courses for you. My dear students, please tell me, we have come to the end of the session. Where you did you gain from my session?
Over to you, ma'am.
Yes, sir. Dear participants, if you have any queries, you can put here. You can chat also, and we can unmute your mic. The resource person is with us. You can put your doubts. You can put your doubts in chat box also. On the basis of that, we will unmute your mic, because we can't unmute all, no? Ma'am, I have one, basically I have one doubt.
Yes. Yes.
Shall I ask, ma'am?
Yeah, please do.
Yes, ma'am. You told that there are many fields in stock exchange. First, you want to know which field you are much interested. Like that, you told. What are all the fields? What are all the various fields available in stock exchange?
Yeah. We have. Let me see if I can share my my slide. If I can. There was a PPT that I had prepared. Ma'am, I am going to share my screen again.
Yes, ma'am.
Ma'am, can you tell me, are you able to see my screen?
Yes, ma'am. Yes, ma'am. It's visible.
Yes? Okay. Okay.
Yes.
So these are the different entities that some of the entities that function in the stock markets, and we have exams for each and every segment here in the stock market, stockbroking. So when it comes to stockbroker, so stockbroking, that is the place where the buying and selling of shares happen in the with the stockbroker. So when you work with the stockbroker, you will be exposed to either equity, derivatives, and maybe commodities. If you are, depending on the stockbroker. So you will be exposed to this just 3 different trading segments. In addition to that, to support equity, to support trading, you need demat account. Most stockbroking companies have the option or license to open a demat account. So you will be exposed to some extent to demat accounts. Most stockbroking entities help in help the employees in help the investors in purchasing or advising about mutual funds. So you will be exposed to mutual funds. You will be, as I mentioned, every stockbroker has to function as per rules and regulations laid down by SEBI, laid down by BSE. So you will be exposed to those rules. These are all different departments. If it's a large organization, equity will be one department, derivatives is another department, commodities is another department, compliance is another department. These are all different departments. Demat account opening will be another department. These are all different departments. So when you are working with a stockbroker, you will be exposed to all these departments, and you will be and since we have the exams, we have the apt exams for each of these departments. We have the apt exams. You first see which is your area, that area you like. The why I asked for you to identify, the reason why I said identify the area you like is then it becomes easier to study. You are studying a subject you like. 90% of the task is over. It is better than studying something you don't like. Studying something you don't like is going to be a big headache. But you have identified what you like. Now, when you register for the exam, you get the study material. You are going to study a segment you like. And you already have practical knowledge. Studying that textbook will be so easy. Attempting the exam will be so easy. That is why I said identify the area you like. And then once you identify, so if Demat accounts happen to be the area you like, once you clear the exam, can you see my cursor? You can move on to working for the depositories, because you have cleared the exam related to Demat accounts, which is depositories. That exam you cleared with work experience, and with those certificates, you can move on to depositories. With surveillance or with all those certificates, compliance certificates, you can move on to BSE or NSE, because we are regulatory bodies. BSE, SEBI, NSE, we are all regulatory bodies. We are the ones who lay down rules and regulations. So you can move on to, and also if you have the certificates of equity derivatives, you can also move on. Using those certificates, you can move on to work for the stock exchange. You have the mutual fund certificates. You can move on to a mutual fund assets management company. You can work for transfer agents and merchant bankers. So these are the areas where you can work with the work experience and certificates. Or you can continue working with a stockbroker. There is no, or you can also start your own business, stockbroking business with a good amount of experience. You have the certificates with you, and you need one more thing. You need to have the knack of getting clients. You have that knack of getting clients, you can very well start your own business. I have my classmate. Okay, my classmate of mine. He is very good. Okay, he knows to get clients. He's an expert in that, and so he took up a job with the stockbroker after understanding how this stock market is. After learning the business of stock market, he started his own business in stock market a stockbroker. He now drives a Mercedes Benz. So I'm not joking. I'm not kidding. He drives a Mercedes Benz. That gives you an idea that's of how much money you can make, provided you know to get clients, which I don't know. I'm not good at that.
Thank you, ma'am, for clearly explaining. And it's a very provoking session for us, sir. Thank you, ma'am. And dear participants, once again,
there are any questions, ma'am?
Yes, sir. Yes, ma'am.
There are some questions in the chat box. Shall I address them, ma'am?
Yes, ma'am. Yes, ma'am, please.
Ma'am, please, if you take the questions one by one. Dear students, please, shall I address the questions one by one?
1 second, ma'am. Sorry to interrupt. Maheshwari P. Secretary, sir, kindly unmute Maheshwari P. She wants to ask some doubts, please.
Okay, ma'am. One question is asked is FDI and stock market, investing in stock market same? FDI is foreign direct investments, okay, from foreign companies or institutions can to a limit can invest in companies, can invest in companies here in India. Is it the same as the stock market? No, this is secondary markets. Stock market is where investors buy and sell shares among themselves. That is the stock market. Foreign direct investment is a different, when foreign companies are investing in directly into companies. Well, they need the permission of the government. They need to go through some formalities, but it's not the same as stock markets. Stock markets, FDI doesn't take place through stock markets. Stock market is where investors like you and me buy and sell our shares. Mary Zipporah, is it clear? Okay. Then is investing in equity shares or mutual funds, which is more beneficial to? So Dr. S. Poonam, the full name is not there. It just, can I get the full name? Dr. S. It just says Dr. S. Poonam, because the full name happens to be hidden. Okay, I will anyway answer your question. You asked if which is more beneficial. Let me take some time to go into details about investing in shares and the difference between investing in shares and investing in mutual funds. As I mentioned in my session, when you are investing in shares, we expect you to do some study about the company. You are supposed, not somebody else. You are supposed to get information about companies. You are supposed to study those information. Don't apply ratios or analysis, but study the information. Then decide whether to invest or not. When you start working, okay, my younger sister, she used to work in the software company in Bangalore. She used to leave the house at around 7:30 in the morning, and she will get back at 11:30 night, sometimes 1:30 next day morning. She left 7:30 today morning, she will come back 1:30 tomorrow morning. One day she came back at 4 o'clock tomorrow morning. So she's earning a really good amount of money, but no time. Because no time to eat, no time to sleep. Then where do you think you'll get time to browse through websites looking for information about company? There is no time at all for your own personal needs. And many of you will work for, will opt to work for banks, private companies. You will be so dedicated and so involved in your work. Time is it will be a getting time for your own needs will be a big issue. Then if that is the case, so you have money, you have knowledge, but you don't have time to browse. What do? Invest in mutual funds. Put your money in mutual funds. When you put your money in mutual funds, what happens is these mutual funds are managed by stock market professionals. They can talk to you about almost all the companies in BSE. They know almost all the companies in the stock exchange. They know where to invest, which companies to invest. So put your money in mutual funds. Your money will be taken, your investments will be taken care of by stock market professionals. And you will get your returns. When the stock market is going up, you will definitely get your returns. You will get dividends for the shares that this stock market professional mutual fund companies are buying. For those companies that they bought on your behalf, you will get dividends. So, but one thing you must keep in mind, when you are, if you are doing it yourself, if you are doing the investment yourself, you have 10,000 rupees. You are investing 10,000 rupees in the stock market. You are going to invest the entire 10,000 rupees because you are doing it yourself. But when you give it to that same 10,000 rupees to mutual funds, he will deduct some amount as his service charge and some other charges. Only the remaining amount will be invested. So that is the difference. If you have time, do it yourself so that the entire amount is invested. If you don't have time, then it's better to give it to mutual fund. Let an expert, let a professional do it. But then in that case, you have to pay him some fees. He will deduct some amount from that money as fees. And so only the remaining amount will be invested. So maybe 500 rupees will be deducted as his fee and the remaining amount will be invested. So you first analyze what is your situation. Do you have time? Can you do it yourself? If it's so, do it yourself. You have money but you don't have time. Okay, then put it in your funds. Dr. Ponnamal, yeah. So thank you. Now name has come. Dr. Ponnamal, did I explain it? Fine, it was there. Okay, then. Okay. I have a query from Dr. Kalai Selvi. Kalai Selvi, ma'am, I'm so happy you joined. When I took up this session, I saw your name, and I was extremely happy that you found time to join my session. I hope you enjoyed my session, and I hope you finally give me an opportunity to address this, your students. Okay. During the pandemic, which sector is suitable for new investors? Ma'am, in every sector, we have good companies. In every sector, we have companies that should not be touched at all. So, pandemic alone should, if you're asking that, if you're saying about pandemic alone, based on the situation happening in the pandemic, I will tell you during the pandemic, which companies, okay, if you want to analyze it that way, during the pandemic, which companies were allowed to function? Banks were allowed to function during the pandemic. I'm talking about March and April last year, during the actual lockdown, when the whole country went into a standstill kind of a lockdown. Banks were allowed to function. The stock exchange was allowed to function. Then healthcare, companies under the healthcare, hospitals were allowed to function. Pharmacies were allowed to function. So since this company's function, we saw that this particular companies, definitely their revenue was not as hit as as badly hit as the other companies. The revenue was not as badly hit as the other companies. But ma'am, I will tell you that all other companies, they were all very smart enough. Let's take, for example, the company called BASF. It's a chemical company. They were into making not only many companies, chemical companies. They were all into making chemicals for different products like paints, chemicals for dyes, chemicals used in different types of factories. Government said only essentials, and government listed the essentials. Essentials are banks, then healthcare, then supply of essential services, essential goods like milk and grocery items. So do you know what these companies did? They stopped making chemicals for paints and making chemicals for dyes. They started making chemicals to be used in hospitals. So they're smart, very smart people. So this is what companies did, so that they continue to function even during pandemic. They adapted. See, you have to change. They adapted to the change. that is what good companies will do. They will quickly adapt to the changes. For another example, United Brewery, they were into making what is it? Beverage, right? Alcoholic beverage. This bars all stopped, hotels stopped, bars stopped, everything stopped. What did they do? They switched from making alcoholic beverage to making alcohol to be used in hand sanitizers. So they are allowed to function because they changed, they adapted to the change. This is how. So if you see in the pandemic, these were the companies that were allowed to function. So these were the companies whose business were not, their business was impacted. It was impacted. It was not that they made extremely huge profits. No, they all suffered during the pandemic, but not as much as the other companies. Ma'am, was it clear, ma'am? So during the pandemic, which was best suited for investor, I will say, if you see during the pandemic, Hindustan Unilever, the share price hit an all-time high during the pandemic. Why? Because of this. Because this is the only company. This is one of the few companies allowed to function. Hindustan Unilever makes sanitizers, they make soap, bathing soap, they make detergent, toothpaste. We need all this. This company was allowed to function. So during the pandemic, just 10 days after the lockdown, HUL shares hit an all-time high. You can go to the website and see. Just a few days after lockdown was imposed, this particular company shares hit an all-time high. So you can try to segregate that way, which are the companies that were allowed to function during the pandemic, buy the shares of those companies. But personally, if you ask me, even the other companies did fairly well also during the pandemic. Banks all did fairly well. Any more questions? I'm just trying to.
Maheshwari ma'am, kindly ask your doubt. You have already raised hand. You are able to unmute your mic, please. Dear participants, do you have any questions? You can put forward in chat box also.
Yeah, ma'am. Good afternoon, ma'am. Mageshwari here. Thank you, ma'am. Just I wanted to get your contact number. That's it. Excellent session, ma'am. Thank you.
Oh yes. I will share it with. Actually, I share this my contact number with. After the session, I share it with everyone. I am going to put it here on the.
Yeah, thank you, ma'am. It was an excellent session and very useful as well. Thank you, ma'am.
Thank you so much. Thank you so much, ma'am. I am sharing my, especially for the students, I am sharing my WhatsApp number and my email ID.
Okay,
I prefer WhatsApp. Okay. This is my that is my not only WhatsApp. That is my. I'm available on call, SMS, and WhatsApp on that particular number. That is my email ID also. If you have any queries related to the stock market, maybe you are right now you don't have. Maybe a query will come tomorrow. Maybe next week, 6 months from today, 1 year from today. Do not hesitate. You can send me a WhatsApp. I prefer WhatsApp messages because since I take classes regularly, if you call, I might not be able to answer the moment that time you call. So send me a WhatsApp message, or you can send me an email. WhatsApp is better. I will definitely get back to you. I will definitely reply to your messages. And do not think, oh, it's been so many weeks since the session, so let's not now. No point contacting. No, you can contact me even 1 year or 2 years after this session. please, if you happen to lose my number, you can please collect my number from any of your lecturers. And I request all the lecturers, do not hesitate to share my number with your students. You can collect my number from Dr. Sengutayan sir. You can collect my number from Uma ma'am. I hope you have noted my number. Please do not hesitate to share my number in case the students lose it sometime later.
Dear participants, I think you people are very clear about the
Ma'am, before I officially hand over the session, since there no more questions, I would like to take this opportunity to thank especially the Professor Dr. Sengutayan for giving me this opportunity to address you. Sir, the day I still clearly remember, the first time we spoke over phone. Sir was very busy. Sir promised to get back, and sir definitely got back. Sir was very accommodating. He did not say no. You were having your exams, I think, at that time. Sir did not say no. Sir promised to accommodate the session when exams got over. This today's session is, from what I understand, is a teamwork. I think Uma ma'am was there. There. I think there was one more ma'am. I didn't get your name, ma'am. I didn't get who. One more like sir, ma'am was moderating. Was a moderator during the session. So sorry. So today's session is a result of a teamwork, considering of sir and many other faculty. So thank you all so much. Thank you all so much for the effort. Thank you so much for being so dedicated to, and because of your dedication, this session was possible. So thank you all so much. And I would like to thank each and every participant, the students and those from those who are also participating from other colleges. Your participation, your interaction definitely made the session a success. I wish you all the best for your future, and I wish you all the best for your exams. Thank you all so much. Thank you. So I hand over the session back to.
Thank you, ma'am. Thank you, ma'am, Ms. Marina Jose. And really, you explained the session and make it a very interactive session through all your live examples and your experiences. And definitely it will be a provoking session for our students to go for investments. Even you offered a solution for those who don't find time, at least to invest in mutual funds. So that is the way you presented your session and make us interested to invest in stock market. Thank you, ma'am. And next I shall move to Dr. S.P. Priyadarshini to present vote of thanks in this special occasion. Dr. S.P. Priyadarshini, Assistant Professor, PG and Research Department of Commerce, CA, to deliver vote of thanks. Priyadarshini, ma'am. Okay. So I take this great opportunity because of some network issues. She might not be available. So I take this great opportunity to present my vote of thanks on the special occasion to Ms. Marina Jose for being with us amidst a busy schedule to share all the experiences and knowledge in stock market. And really, as I already shared, it's very provoking session for us. We are eagerly waiting for next advanced session from your side, ma'am. Thank you, ma'am, for being with us. And I thank the management represented by Ms. P. Arundhati secretary of our institution, for giving us the opportunity to conduct the check-in in a very successful manner. And also I thank the coordinator of this program, Dr. Sengotayan sir, Associate Professor and Head PG and Research Department of Commerce CA, Kaamadhenu Arts and Science College at Mangalam. Thank you, sir. And also I thank the technical supporters of this program, Dr. P. Saravanan sir, Associate Professor and Head PG Department of Commerce, PA, IT and Finance, and Mr. Jagannathan from the same department. Thank you, sir. And also I thank all the lecturers from our institution and also our institutions, and dear participant students from our institutions and other institutions for being participated in this program and get benefited of it. So I think really you will be the beneficiaries of this program from the live session of today's eminent resource person. Thank you all once again. Thank you, ma'am. Thank you, ma'am. Rina, ma'am. Thank you. Thank you.